What's going on, everybody? Welcome back to the Financial Freedom Show with Chase Lawson. I'm your host, Chase Lawson, personal finance enthusiast and the author of Financial Freedom, Breaking the Chains to Independence and Creating Massive Wealth. I am really excited for today's episode. Today, I'll take you through a pretty cool platform called Wealthfront. I've been using Wealthfront personally now for a little over a year, and I briefly discussed it in one of my Stocks 101 episodes, but today I wanted to walk you through exactly what it is and show you some of the cool features it offers. And for the listeners of this episode, I have a special bonus offer for you for those who choose to sign up for Wealthfront, which I'll discuss near the end. So let's jump in. First off, what is Wealthfront? Well, Wealthfront is what is known as a robo-advisor. That may not mean much to you, but essentially a robo-advisor is a digital platform that provides automated, algorithm-driven financial planning services with little to no human supervision. They typically help you assess your current financial situation along with future goals to then offer advice and automatically invest on your behalf and so much more. But let's jump into their site and I'll show you just some of the cool things you can do. You're currently looking at the main dashboard of Wealthfront. What you'll see right away is this chart. What you can do within Wealthfront is you can link all of your personal accounts within Wealthfront, including your assets like savings and checking accounts, investment accounts, home value, and more, along with your liabilities such as credit cards, mortgage, other loans, and more. Wealthfront will then take that information and they'll look at past history of accounts, interest rates, and more in order to then make projections as to how they then will anticipate your money growing each year. As you can see, it will show you your net worth today based on current assets and liabilities of what you have linked, and then it will project your net worth at retirement. This way you can see, will I have enough money to retire and then live off that money? They make assumptions like annual growth rate of your investments. They use current interest rates on your checking and savings accounts, and they project where and when you'll be pulling money out of your accounts once in retirement through their algorithm. For example, they know that you probably will pull money out of checking and savings first, then your taxable brokerage, and then retirement accounts, and they also project future income from things like Social Security. You can see here that I currently have a projection of retiring at age 47, and it tells me that if I keep it up, I will have $3.15 million at that age. Then it shows my net worth continuing to rise since I won't need to pull it all out right away and I can still be putting it to work for me. And you can see that at age 58, one of my mortgages will be paid off and it lets me know that. It tells me that at age 70, I will start earning Social Security payments. Now, I don't think Social Security will still be around, so I can turn off that assumption if I want to be even more conservative. But then if you look, my life expectancy of 92, it projects me having over $8 million at that time. So I'm in a really good spot and I feel good about this. So how did Wealthfront get this information? Well, let's click this icon and we can take a look at some of those assumptions being made. So as you can see, first off, based on their projections, I will only need $2.3 million to retire at age 47, so I could probably retire earlier if I wanted to. I can then change this goal, and you can see that I could even retire at age 43 if I wanted. The dashed line is what I need, and the solid line is what I'll have at each year. You can see further, this is based on me saving $3,900 a month. What if I saved more? So I can check different scenarios. For example, if I bump that up to $4,900, then I'll have $3.6 million at age 47. And then you can see down here that that changes my retirement age to 42. So I can retire a year sooner. Well, what if I don't want to save as much and I only save $2,900 a month? What will that do? Well, you can see that obviously changes my retirement age to 45. You can add other scenarios like saying what you want to do with your residence when you hit retirement, whether you want to keep it, downsize it, or sell it. You can add any projected windfalls like bonuses or tax refunds or inheritances, to name a few. Then you can also put in projections for retirement spending. Right now it shows that I'll need $5,568 a month in spending when I do hit retirement, which includes $623 a month in housing costs and $4,945 a month for other retirement spending. That's based on a moderate spending approach. I could be thrifty and then retire at age 40, or I can live more lavishly and then I'd have to wait until 47 to retire. You can see that their algorithms are based on actual data, which shows that spending in retirement decreases by about 22%, and then they factor in inflation and current spending habits as well. You can change your projected life expectancy, Social Security payout, inflation, and other retirement income. You can change your tax filing and income and projected income growth. It has projections on each of your accounts as well. As you can see, it projects a 5.8% annual return on stocks, which I think is a little bit low. So this is even conservative there. And then retirement is obviously a big goal, but you can set other goals as well here, and it'll tell you what that will do for your financial picture. As you can see here, I created this sample scenario where I would be traveling for 6 months and spending about $10,000 over that time. As you can see, I can comfortably do that, and my net worth will stay the same. This assumes that I return to earning the same amount and that no other projections change. You can see as well that I don't include any income while traveling, because I'm obviously, for 6 months of travel, probably not going to be able to keep a job over that time, right? And it still doesn't impact my plan. You can add other scenarios like purchasing a home, saving for college, and more. So this is super intuitive, personalized to your own situation. There's a lot of cool things you can do just from a planning standpoint that you can spend a lot of time on, and it'll map out your personal financial picture for you. Next, you can see on the right here, it will tell you what your current average savings rate is. And then based on your income, what percent of income you're saving. And then it can tell you, based on your current savings habits, what it recommends you should do instead. So it says, hey, what if you save $3,900 a month? Okay, you should shift some money out of certain accounts and into other accounts. So you're saying, hey, instead of $621 a month in your individual cash account, why don't you save $310 a month? So it'll tell you if you're being too aggressive or too conservative with your savings. Okay, so that is some of what you can do with the free planning tools they offer. I haven't even fully dug into all the scenarios you can create with it, but that's a really cool feature that I like a lot and can track your progress over time. The next cool thing Wealthfront offers is a savings account of sorts. So you can see that I have some money in their cash account. Wealthfront offers favorable interest rates on this account. When I originally signed up, it was about a 2.27% APY, that then went up shortly after to 2.57% APY. It has recently dropped due to the Federal Reserve lowering interest rates in America to about 0%, like any other high yield savings accounts. Interest rates on savings accounts do have to factor in the interest rates set by the Fed. So when they drop interest rates like they did over the past few months, unfortunately, savings accounts cannot offer as good of returns. However, Wealthfront does still have a 0.35% APY, which is really good. The average savings account currently in America earns about 0.06% interest, so this is more than 5 times the average rate. Since Wealthfront is exclusively online, they don't have to pay rent for a brick and mortar location, they don't have to pay utilities on the building and all the other overhead expenses, so they can return those costs to you in the form of higher interest. Well, how safe is this account and how safe is your money in the account? Obviously, you want to make sure that you're not at risk of losing everything. And if you've ever been in a bank, you've probably seen a sign indicating that they are insured by the FDIC. This is what you want with a savings or checking account. FDIC is Federal Deposit Insurance Corporation. It was created in 1933 as part of the Banking Act of 1933, signed into law by FDR. If you know history, this was right after the Great Depression and was created as a result of what happened. Essentially, during the Great Depression, with the huge stock market crash, there was a massive run on the banks when people were essentially withdrawing everything they held in the bank to get them through this tough time. And the banks didn't have enough money on hand to pay everyone what they were owed, and a lot of banks failed, and a lot of people were out a lot of money. What the FDIC provided then was security on your money. It is an independent agency of the US government, and banks pay premiums to fund the FDIC, which then provides protection to individuals and their money. It allows for up to $250,000 in protection per depositor, per FDIC insured bank, per account category. So if your bank were to lose all of its money and it was FDIC insured, you would be guaranteed by the FDIC all of your money to be paid back ASAP, either via a new account at another insured bank or a check in the amount of your insured balance. If you have accounts at multiple banks, you get up to $250,000 in protection per bank. If you and your partner have a joint account, that provides $500,000 in protection for that account, plus $250,000 per individual account. And it covers everything from checking and savings accounts to money market deposit accounts and CDs. So this is very important to have in place with whoever you bank with. So is Wealthfront FDIC insured? It is, in fact. And actually, it provides up to $1 million in protection, or 4 times the standard. The reason it's able to offer $1 million in protection is because when you deposit money into your cash account in Wealthfront, they take that money and sweep it into banks that are protected by the FDIC. So your money could be in upwards of 4 different banks if needed, but you still have direct access to that cash when needed and can withdraw the money at any time. So Wealthfront is actually safer than individual banks for higher net worth individuals while offering much more favorable interest rates. Pretty cool. In addition, Wealthfront is continuing to add new features to their platform. They recently added checking account features to their cash account, so it can essentially operate as both a savings and checking account. As you can see, you can get a debit card, still get the higher interest rate, FDIC protection, sign up for a direct deposit, pay bills, get cash fee-free from 19,000 ATMs, active fraud monitoring, and soon you'll be able to deposit a check with their mobile app. I checked and there's 2 ATMs within a half mile of me at CVS and Walgreens that are fee-free for Wealthfront. I have not yet signed up for these features, so I can't really speak to them other than what they are, but they're continuing to look to add new features to their account holders. Pretty cool. The last item I wanted to discuss is my favorite feature of theirs. It's their investment account. As you can see, I have about $20,000 in my investment account with them. This is made up of a diversified portfolio, including US stocks, foreign stocks, emerging markets, dividend stocks, municipal bonds, and cash. With Wealthfront being a robo-advisor, they take the decision-making out of your hands and they handle it on your behalf automatically. Because the downside of investing yourself into different investments is that you have to constantly monitor it and you're trying to keep your portfolio balanced within a certain percentages and different asset classes, you're constantly having to rebalance everything yourself, which can be hard to do. You can see here that I'm currently within a margin of error of my target allocation percentages in each class. With US stocks, the target is 35%. I'm at 35.1. Foreign stocks is right on at 26. Same with emerging markets at 17. Dividend stocks, the target's 8% and it's 8.1% currently. Municipal bonds, 14%. It's 13.4%. And you can see the return of each class. For example, US stocks has returned 18.7%. Foreign stocks has returned 4.5%. Emerging markets 10.1%. Since different asset classes will return different rates of return over time, you're constantly going to be out of balance. For example, with US stocks having returned 18.7% and far exceeding the returns on other asset classes, had there been no reallocation, that percentage of holdings would probably be around 40 to 45% right now. But Wealthfront will constantly buy and sell investments on your behalf to keep you balanced towards your target breakdown to stay within your risk tolerance while also helping you return some sizable returns. This is all based on your individual risk score, which as you can see for me is 8.5. And this is out of 10. So I'm riskier in general, but I can afford to be as I'm younger and I have a lot of time to stay invested. My wife, on the other hand, is a 6.5 as she's more risk averse. When you first sign up and create your investment account, it will ask you various questions to determine your risk score. As you can see, some of the questions they ask include, which do you care more about? Maximizing gains, minimizing losses, or both equally? When the stock market drops 10% in a month, what do? Sell all your investments, sell some, keep all, or buy more? Along with some other personal questions I didn't show. But based on these answers, it will tell you your individual risk tolerance, which for me is an 8.5. Based on that risk tolerance, it then determines where to divide your money and at what percentages. So that's how I got those target allocation percentages I showed you previously. As you can see, as I change the risk tolerance down, it decreases your proportion in riskier assets like foreign stocks, emerging markets, and lesser so on US stocks, while adding to safer investments like municipal bonds. As you invest, Wealthfront will then take that money and purchase ETFs and the different asset classes on your behalf over time, and will constantly look to rebalance your portfolio as investment values change, saving you time from having to do that yourself. Well, how has Wealthfront done? As you can see here, in my little bit over a year of having invested in Wealthfront, I've done pretty well, especially given the fact that the market's tanked for a few months with COVID. It tells you two different rates of return, your money-weighted return and your time-weighted return, which can be a little bit complicated to explain, but as you can see, my return is over 11% for the time-weighted return and over 23% for the money-weighted return. Both really impressive returns. All of these dots that you see here on this chart reflect either money added to the account or dividends received or tax losses harvested, which I'll touch on in a second. But you can see that my lifetime on Wealthfront, which is a little over a year, I've invested close to $18,000, and the value in the account is over $20,000 now, or over $2,000 in returns so far. Finally, you can see here the short-term and long-term gains, as well as tax losses harvested. As I mentioned in other episodes, you don't realize a gain or a loss until an investment is sold, and you don't have tax implications until that point either. Short-term is a year or less. Long-term is more than a year. Obviously, Wealthfront hasn't sold anything for a gain that I've held for over a year, as it shows $0, but they have sold something at a small gain of 8 cents that I held for a year or less, which is why it shows that for the short-term gain. A really cool feature of Wealthfront is this other number, which is tax losses harvested. Essentially, Wealthfront will sell investments at a loss periodically to save you money on your taxes. Here's how it works. Each year, you will take your long-term gains and long-term losses and net them out to get a net long-term gain or loss, as well as with your short-term gains and losses to get a net short-term gain or loss. For example, let's say you sell investments that you've held for more than a year that provide gains of $5,000, and you sell investments you've held for over a year at a loss of $2,000. Your net long-term gain here is $3,000, since $5,000 minus $2,000 equals $3,000. You also, during the year, sold investments you held for less than a year for a loss of $5,000. There are no short-term gains during the year, so your net short-term losses are $5,000. What the IRS allows you to do is to then net those two amounts together to get total capital gains or losses on the year. In this case, you would have a $2,000 capital loss on the year, since $3,000 long-term capital gains minus $5,000 short-term capital losses equals negative $2,000. The IRS has said that you can then deduct up to $3,000 a year in capital losses from your other income. If you have more than $3,000 in capital losses in a given year, you can carry the excess forward indefinitely to use in future years. This isn't something you need to worry about trying to calculate and keep track of yourself. If you import your information into a program like TurboTax, they'll do the heavy lifting for you, but it's important to know that you can use losses on investments to your benefit to save you money on your taxes. That's exactly what Wealthfront is doing for you, and that's what the $827.72 number represents. I can use that to minimize my tax burden when I do my taxes so that I pay less ultimately in taxes. Really cool feature that they automate for you, and that you don't have to try to figure out which investments to sell on your own behalf, and then they take that money when they do sell and invest it in something else for you so that your money is still working for you. And they avoid what is known as a wash sale, which can create negative consequences for you and can be tougher to avoid if trying to manage yourself. You can see as well they offer other cool features that you can activate when you have over $100,000 in investment balance. The tax loss harvesting can be active regardless of balance though. I use Wealthfront in addition to Vanguard and Fidelity. I like a lot of the features that Wealthfront offers, and this just helps me find another way to stay diversified and takes a lot of the burden off of my shoulders. So obviously we went through a lot of cool features Wealthfront offers. Are there any downsides or fees you have to pay to use the site? The biggest downside I see from using the site is that they don't currently offer a human advisor option. You can call in for support with your account, but that's mainly for technical issues or customer service related items. not for help with investing or personal advising. Their main competitor, Betterment, does offer this service, but it comes with a higher fee of 0.4% of assets under management and is only for those with investment balances in excess of $100,000, and I don't think that's a necessity in my opinion for most people. Wealthfront as a platform is 100% free to use and link to accounts and use a lot of the tools mentioned. The only fee they do charge is on assets they manage. They do charge a 0.25% management fee on money you have in their investment account, but this is the same with Betterment as well. And I think it's worth that fee for things like tax loss harvesting and auto rebalancing of your portfolio that they do. And that's a pretty low fee anyway. However, for those listening, I did mention that I had a special offer for you. If you sign up with the link in the description below and create an account with Wealthfront, you'll get your first $5,000 in investments managed fee-free throughout your whole lifetime. You don't have to open an investment account right away. You can start with a planning tool or the higher interest cash account if you want, but whenever you do open the investment account, you'll get your first $5,000 managed fee-free, which is a savings of $12.50 per year. Plus, you'll get a referral code to invite others to the platform, and when they sign up, you'll get another $5,000 managed fee-free for each friend you refer. I do highly recommend Wealthfront. I've been using them for over a year. My wife uses them as well, and it's just another strategy you can employ when looking to invest. And once again, takes away some of that burden of trying to do it all yourself, like pick the right stocks, buy and sell at the right times, constantly having to rebalance your portfolio, avoiding wash sales, and more. So thanks so much for tuning in to today's episode of the Financial Freedom Show with Chase Lawson. I hope you enjoyed it. Wealthfront can be a great way to take a more hands-off approach with some of your investments while offering useful and helpful tools to use for financial planning. Once again, be sure to take advantage of the offer to the link in the description below to get your first $5,000 in investments managed fee-free for your whole lifetime. I personally use the Wealthfront platform and am a fan, so this review is 100% genuine, and I just want to let you guys know about it so you can check it out as well and sign up if it interests you. Please be sure to let me know your thoughts, or if you have any questions at all on it, or on any financial topic. I'm here to make personal finance simple for all of you listening, and as always, please be sure to like this episode or leave a review if you got value out of it, and make sure you subscribe and share with others so you and your loved ones can all stay up to date with the latest content. I do this for all of you, so your feedback is super important and helpful. Thanks so much, everyone, and until next time, stay safe and go get 'em.